Good day, fellow investors. Given what's going on in the market, I decided to make a quick market commentary that I know many of you need now. If you look at the market over the last 6 months or year to date, we are down 18%, so almost a bear market. But let me just give you immediately a different perspective. Almost 4,000 points. If I go back on this chart, we are where we were 14 months ago. So nothing that crazy. This was an amazing bull run, and now it is steaming off for various reasons. However, I looked at YouTube yesterday, and what I saw there from the biggest YouTubers related to finance, what they are talking about, it's insane what they are discussing. They might be right, but stock market collapse, stock market collapse, stock market crash, and whatever, disaster, inflation, stock market hell, do this, do that. All in all, always ask for this incentive, as Charlie Munger says, and most of them have a link for crypto trades, so they make a lot of money on you trading, panicking, and doing whatever. So always look for the incentive. Nevertheless, we are here investors, so let's discuss what really matters: interest rates, the Fed, the underlying fundamentals of what they are doing, because that's just what you see, the top of the iceberg, and not what's really fundamentally below. Plus, of course, valuations, and then finish with what to do as an investor. Because there is a big difference with investors. The market is, what, 65% up over the past 5 years, not including dividends, and gamblers, where Charlie Munger said that God is just and that this is just what was expected to happen sooner or later. And if you are caught out in these situations, then of course it's a collapse, it is a disaster, but that's normal when it comes to gambling, no? The house always wins. Those that get the fees from your trading, from your panicking, those win. And maybe it's just what was nothing returning to nothing. Even if, keep in mind, anything can happen. This can be a temporary decline, then everything can boom again, go 2x in the next 6 months, everybody high again on the same thing they were high a few months ago, and then it can crash again. So it is all on sentiment there, which I'm not a specialist. Nobody is a specialist, so that's gambling. Let's talk investing. When it comes to investing, the Fed is the main talk now. Interest rates, because as Warren Buffett says,
everything is off of interest rates.
Interest rates are to stocks what gravity is to matter. Higher interest rates that compare to stocks push the valuations lower and lower, and therefore you see stock prices decline. And the Fed has started increasing interest rates. We have seen persisting inflation, which means that the Fed might continue to heavily increase interest rates, perhaps even 75 basis points, and that would then compare stocks. Of course, stocks were cheap with 0 interest rates, but with 4 or 5% interest rates, stocks are not that cheap anymore. Fed said that they will keep increasing by 0.5%, and then the question is, at which point will this be too much, have a negative effect on the economy, on anything, and revert or stop the Fed, where we might see a bounce in stock prices. But then again, if it is an crisis, stagflation, if stagflation persists, then we might actually see the Fed losing control over what it has done smartly over the last 10 years to save us from those crises, and then we'll see how this evolves. Nobody, not even the Fed, know how will this end, how will this evolve, what will be the consequences of the money printing, of the 0 interest rates over the next decade. Trust me, nobody knows. We can be in for a wild ride, but bear markets end, don't worry, but also keep in mind that bull markets also end. And this is the situation. We have had a 13-year bull market. If you don't know that, just look at the long-term chart. So from 2009, from 666 points, I think it was the low, we went to 4,700 and we are still 7 times higher than this. This is a bull market. I don't regard these as nothing more than blips. So really big bull market. So it's logical that 13 years bull market, 13 years of zero rates, 13 years of inflation around 2%, market up still 7 times in 13 years, Fed balance sheet up 8 times, you see the correlation here, 7, 8 in 13 years, and we have slow real economic growth in developed markets. This is the real situation. And now this is changing because interest rates are going up, the Fed has to fight inflation, which means that some factors in the game are changing. But what's the Fed's control focus? Inflation, stability of prices, and employment. Employment is robust, which means they can fight inflation, and we'll see whether they will be successful with fighting inflation and having a soft landing with the economy or not. But of course, when it comes to the market, the more interest rates increase, the lower will stocks go. That's simply mathematics, as here you compare to treasuries of 1% for 10 years, now you already compare stocks with 3% for 10 years, and that is already a game changer. And then also the reality for many, unfortunately, of you out there, if you spent 4 million on a house with an 80% mortgage and now the house price goes down 20%, the bank will be asking for your money. It will be very ugly. If you invested in crazy companies, like all the crazy specs that were out there, what is this? Sophie, we mentioned it, very risky in a video. Of course, we all want to go to space for tourism, so everyone was very high on this, and I received a lot of emails. Sven, what do you think about space and traveling? Well, there was not even a point to making a video, but this can rebound again if there is liquidity and exuberance and the Fed prints money and who knows what. But if you're an investor accumulating the S&P 500, and I'll make a video on dollar cost averaging in the index, we'll talk Google, we'll talk Facebook another time, and we'll talk oil stocks this long weekend, so subscribe for that, and how this situation has to be perceived from an investing standpoint. But the economic reality is this, that a lot of companies have a lot of fiscal debt that can be solved with monetization, printing money, demographics are there, productivity are an issue, populism is arising, Ray Dalio just spoke about it also in his new book. So these are the key issues, and let me know in the comments. And if I get 2,000 likes to this video, I'll make this video next week. So smash that like button to support the channel. And what to do? Always ask yourself, what do I get from these investments? What do I get from these things? The dividend, the earnings, the long-term earnings growth that is already there. And then always ask yourself, what if it goes bad? If the S&P 500 goes bad, can the S&P 500 go bankrupt? No. Can these tech companies, Virgin Galactic, Space Travel, Cappuccino for $7 space dollars, go bankrupt? Let me know in the comments. Also, if you are a small entrepreneur that hired 30 people to grow your YouTube financial business, assuming 50% growth forever, then of course you are in trouble. If you are a one-man band, then whatever happens with all these outside influences, you just keep on compounding your own work and there is no panic. So my conclusion is markets will always go up and down on many worries, but you have to always be in a position that whatever happens, you are okay. If you are not now in that position, start working on being there the next 10 years. And that's all what we do on this channel. We slowly build the fundamentals, not knowing what will happen next, but knowing that the world will change forever, but you don't know how it will change. So if you invest, if you set your life in a way that whatever happens, you're okay, then you are set. And for that, subscribe to this channel, smash that like button, and I'll see you in the next videos: oil, Facebook, Google, dollar cost averaging in the S&P 500, Warren Buffett's 13F for long weekend and week that are coming next. Thanks for watching. I'll see you in the next video.